In this video, we'll be going over IRS Form 8332, Release or Revocation of Release of Claim to Exemption for Child by a Custodial Parent. So this is a tax form that you might see if you are a custodial parent or co-parenting with a custodial parent and you've agreed in principle to transfer some tax benefits to the non-custodial parent. So in this situation, we'll assume that John Doe is a non-custodial parent while his former wife, Mary Jane Doe, is the custodial parent. So there are several things that the custodial parent can do. So and they correspond with the three parts to this one-page tax form. So the first option is that the custodial parent can transfer the exemption for their child for the current tax year. So basically in this situation, what would happen is John Doe's name and social security number would go at the top of the form. Then Mary Jane Doe would complete the part one. She would, let's just say that she's going to not claim the exemption for their daughter Elizabeth for the tax year 2024. So she can write this, she signs it, she enters her social security number and dates the form. Now John Doe would be able to then take the signed copy that his ex-wife Mary gave to him, and when he files his 2024 taxes to claim tax benefits that correspond with the exemption, he would be able to attach this to the tax form, claim that tax benefit, and the IRS would recognize that he has the ability to do that. So part two, Mary Jane Doe could also choose, in addition to the current year, to release her claim to exemption for future years. So let's imagine that Mary Jane Doe and John have agreed that John will have the ability to claim the exemption for tax years 2024 through 2026. So in this case, Mary Jane Doe would also complete part two. She would enter the information as follows. She would sign part two as well with her social security number and the date. So another option that Mary Jane could say is she decides to not ever really want to claim that exemption. She can write all future tax years. And this basically means that for as long as Elizabeth Doe can be claimed as a dependent, here Mary Jane Doe has notified the IRS that she's giving up her right to claim that exemption for as many years as someone can claim Elizabeth Doe as an exemption on their tax return. So that brings us to part three. Let's imagine that this is the form that's on file, and Mary Doe and John have changed their mind, and she's going to take that back starting in tax year 2025. What you would see is basically all this information would go away. She would start a new form, and she would basically go to part three, and she would write that starting in 2025, actually she could write all future tax years here. She would sign it, enter her social security number, and date the form. So there are a couple of limitations here when using part three. Because John Doe is going to take his claim form and attach it to his tax return, Mary Jane Doe would need to give him a copy to officially notify him that as of 2025, he's no longer able to do that. She would then attach this Part 3 to her tax return, basically telling the IRS, hey, you have it in your files that I previously released my claim to exemption. I'm putting this back on my tax return, saying I've decided to claw that back. I'm going to start claiming this exemption in the future. She can do that. And however, she cannot do that for the current tax year. So at the time of this recording, we're actually past the normal tax filing deadline of April 15th. So if we were in the middle of tax season, Elizabeth would not be able to use this as a way to pull the carpet out from under John Doe. She can only do this for future tax years. So keep that in mind. If you're the custodial parent that's looking to claim that exemption back, you can do that at any time you want, but it's only applicable for future tax years. So a couple of frequently asked questions include whether or not this applies to more than one child. And at the very top of the form, it actually says attach a separate form for each child, presumably because each child is a unique person. They're uniquely, you can have, a situation where one parent may claim the exemption for one child and decide to release their claim of exemption for another child. And it's between the parents to work that out. So the IRS simply says, however many children you plan to do this with, you need to file a separate Form 8332 for each child. So if John Doe and Mary Jane Doe had a son in addition to Elizabeth, we'd be going through this form possibly with the same transfer, possibly some different treatment based on that particular situation. So let's just say John Jr. is, another child, and Elizabeth wants to revoke her claim, or she wants to revoke her claim of release to Elizabeth Doe, but she does not want to revoke her claim of exemption to John Jr. So she wants John Sr. to be able to still claim that. Well, as long as she doesn't actually file the Form 8332 to revoke the claim of release for John Jr., then their tax situation would be fine. The IRS would recognize that Mary Jane is going to revoke her claim or her release for Elizabeth, but then John would still be able to claim the exemption for John Jr. So another question that I've frequently gotten is, what kind of tax benefits are you able to transfer? Generally speaking, the tax benefits are the ones that correspond with the status of claiming an exemption. So a child tax credit, the additional child tax credit, and the credit for other dependents are tax benefits that can be transferred based on IRS Form 8332. So if Mary Jane Doe is releasing her claim for John Jr. on a different tax form, then that would mean that John Sr. can then claim either the child tax credit, the additional child tax credit, and or the credit for other dependents, depending on that unique situation. So while John's able to do that, Mary Jane's not able to. However, she would be able to, regardless, claim the earned income credit, the dependent care credit, and or head of household filing status based on her situation, whether or not she qualifies as the custodial parent. So if Elizabeth Doe and John Doe Jr. spend the majority of their time with Mary Jane, then she can transfer certain tax credits. She cannot transfer the earned income credit, the dependent care credit, or the head of household filing status. Those are all things that John Sr. would have to qualify for independently. Now, John Sr. could claim head of household status if John Jr. happened to meet the criteria, be the qualifying child that John Doe can claim, but that would be beyond the scope of what you can and cannot do with IRS Form 8332. So this tax form presumes that, in this situation, Mary Jane Doe is clearly the custodial parent and John is clearly the non-custodial parent. So that leads us to our last question that we'll discuss in this video, which is how the IRS determines the difference between a custodial and a non-custodial parent. For tax purposes, generally, the custodial parent is the one where the child stayed with for the most days during, or the most nights, technically, during the tax year. So if there's a 365-day tax year, generally speaking, even if they try to split equal custody, generally speaking, one parent will have still spent more time than the other with that child. If there is a tiebreaker, if for some reason, let's just say John Jr. spent 180 days with John Sr. and 180 days with Mary Jane Doe, and then spent 5 days out of the tax year with grandparents in a third location, then the tiebreaker would go to the parent with a higher adjusted gross income. So that's the clear-cut way that the IRS determines, for tax purposes, who the custodial parent is and who the non-custodial parent is. So keep that in mind as you're trying to determine within your situation who's got custody, who doesn't have custody, and then you can walk through your tax planning accordingly. So that's all we have for this video. We do cover this topic and a little bit more, some of the background information and some of the special considerations about filing IRS Form 8332 in our article. So if you choose to, please feel free to go to teachmepersonalfinance.com, type in IRS Form 8332, and you'll see our article appear. So if you like our tax articles, please feel free to subscribe to our newsletter. If you like our YouTube videos, please feel free to subscribe to our YouTube channel. And if you have any questions, comments, or if there's a topic that you'd like to see discussed in an upcoming video, please hit me up in the comments section. Thank you very much and have a great day.